Hi, Taiwo here. On today's episode of the Real Estate Tax Series, I will be discussing the real estate professional status. Yesterday, I made a post about the passive loss rules and why you might not be able to utilize your real estate losses to offset other sources of income like your W2 income and other businesses. And on today's episode, I will discuss a strategy that allows you to bypass the passive loss rules. But before I go right in, my name is Taiwan Agbaje and I'm a tax strategist. I'm also a certified public accountant and I work with real estate investors, private practice, medical practitioners, and physicians and home care agencies to help them strategically and legally save on taxes so that they can grow their wealth. Now, one of the rules that you can and strategy that you can utilize to bypass the passive loss rule is by qualifying as a real estate professional. And this is a tax qualification, not it's different from being a real estate investor or a realtor. It is a tax qualification. Now, all of these things, whether it is the passive loss rules or it is the real estate professional status, all of it is covered under the Internal Revenue Code 469. So you may want to research more on that. Now, going back into the real estate professional status, for you to qualify as a real estate professional status, you will need to qualify. There are two key conditions that you need to meet. But why do you even need to qualify as a real estate professional? Why do you need to obtain the rep status? The reason is because it positions you to really optimize a lot of the benefits that you can get by investing in real estate for tax purposes. Now, you by qualifying as a rep, you are able to by qualifying as a rep and also materially participating in your activities, you are able to offset all of your real estate losses against all other sources of income without limitation. Now, but before you qualify as reps, there are two conditions that you need to meet. The first one is you need to work and track 750 hours on real estate related trade or business. And to do that, you might be able to work on, and this includes, you know, construction, development, management, and then the other second condition is that you also need to work on real estate activity more than any other activity. This is the hardest of the rule, and that's why a lot of W2 employees and active business owners are not able to qualify because what it means is that if you worked on your regular 9 to 5 job for 2,000 hours in a year, you will need 2,001 or more hours worked on real estate related trade or business. And that's going to be a total of 4,000 hours in a year. Of course, that would be difficult to substantiate in an audit. So that is why for most full-time employees or active business owners, you cannot qualify for reps because of the second condition. Now, let's say you've met those two conditions and you now qualify for reps. You now also need to meet a third condition, which is the material participation. You also need to materially participate in all of your real estate activities in order to now offset your losses against other sources of income. So you don't stop at just qualifying as reps. You take it a step further and ensure that you meet material participation on each of your real estate activity. There are 7 tests of material participation, and you only need to meet one of those tests, not all the 7. Just one is what you need. However, there are 3 of those tests are the easiest to meet and the most common one. On tomorrow's episode, I'm going to talk about the 3 material participation tests, so you don't want to miss that. If you are looking for a tax professional for your real estate tax needs, we are currently accepting new clients for the 2025 tax season. Reach out to us. We will be happy to take care of your real estate tax needs. I'll see you tomorrow.